Greetings, everybody. This is Jeff Scott, and welcome to this week's edition of my top-down review. Maybe just a couple changes there. There we go. I titled today, Big Cap Tech Takes Over. If you watched last week's video, I sort of suggested that I thought Amazon, Google, and others, Google over the last couple of weeks, were ready to make a move, and they did. So now the question will be, they took over. Do they lead the NASDAQ to new highs? Heck, they're close. Or was that a bear trap? I don't feel the bear coming yet, so I'm thinking we got some more room to go. Today's actually the 10th. By the time I post this will be April 11th, 2021, and my email address, hgsidoc@gmail.com. And as I say every week, I appreciate the comments, even if they're negative. And please hit the up thumb if you're watching on YouTube. Hit the subscribe button because I don't keep a mailing list, and that way you'll know when I post these. As always, this is for education purposes only. I am a doctor, not a broker. I am independent. Nobody pays me to say good things or bad things about any tools, and trading involves risk, and you alone are solely responsible for any investment decisions you make. I always like to call out my influences, people that have helped make me into the trader I am today. And I'm not going to spend much time here because I've done this every week for a long time. I own a lot of different tools. If you capture me during the day, during Zoom, of course, to the people I work with, I would never trade during the day. To the people I don't work with, you'll see TradeStation and Thinkorswim likely on my computers, probably both, with the similar indicators in both, the Q indicators, the John Person indicators, the Dr. K tools. And I use HGSI as I'll use it today for doing a lot of the analysis in the market. EdgeRater supports that. And I'm an unpaid volunteer. This is just education. I've got nothing to sell you, nothing to offer. And anything I suggest is just education. Speaking of education, I do consider myself an options trader. Probably a boring one. I do options instead of stock, but mostly directionally and mostly the stock replacement. And if you're not really good at options, I highly suggest you go to the Options Industry Council website or other education sites and become proficient in options. Speaking of websites, here's a website for HGSI, the software tool. As I said, I've got no financial relationship, but you can click on the free 30-day trial, and it's just as it says. It's a free 30-day trial without requiring a credit card. Under investing strategies, you'll see many movies by myself and others. Stock patterns are cyclical, and last week I said the spiders and the Dow already felt like they're in their next leg up. I don't think they're down here starting a long run. I still think we're closer to a top than a bottom, but I thought they were going to continue that leg up. And the question was, would the NASDAQ and the Russell join them? Well, one did. The NASDAQ certainly had a leg up. The Russell struggled, and we'll look at that. Based upon where we're at on this slide, and it's much easier when they're all performing the same way, I have different ways of approaching the market. Since it feels like we're in a leg up move, I did buy more last week, and I did take off some of my protection. If we look at how the market ended, and starting right here, and then the rest of it are the S&P 500 sectors with a lot of their constituents, it's pretty clear financials were super strong on Friday. Everything was green. Materials was fairly green. Energy was weak on Friday. Industrials look pretty strong. Staples were weak. Technology's been strong. Utilities weak. Healthcare's improved, all except for biotech. And communications looked weak. And real estate was weak. I have this up and running. It's a simple chart. All I did is recreate the holdings or the major holdings of the SPDR ETFs and look at green if they're up on the day, red if they're down. There's no indicators here. And it just gives me a sense of how the market's doing. Let's take a look at the market. Let me just pull up some charts here. All right, so let's step back and look at the E-mini futures, the NASDAQ futures, the YM, the Dow futures, RTY, the Russell futures, and then the VIX futures and the dollar futures. First thing you might notice is that on the S&P 500 and on the Dow, we're at all-time highs. On the NASDAQ, we're very close. Very close. On the Russell, not so much. The Russell being the laggard. The VIX has really come down a lot, and the dollar seems to be dropping off of its recent attack that broke it above the 200. Let's take a look a little bit more closely. So the dollar broke, or the dollar SP futures broke above their 50% extension, and now they're at the 67% or 167%, which would be the next potential line of Fibonacci resistance. Certainly wouldn't surprise me to see this thing get tired. That would be another 35 or so S&P points. This market's been out of control to the upside. It's been in a buy signal since coming off the 17, the day before to touch the 50. How is that not a bullish looking chart? The only concern is how far is too far. The NASDAQ futures, here's the all-time closing high, right below the all-time closing high. Really just below. Close here was 13,820.75, and the close here is 13,811. So we're pretty much 10 points below all-time closing high. The last time we got up here, we reversed. So big move, bullish buy signal here. At some point the market's going to stop going up, just not yet. Dow futures, like the S&P futures, are at all-time highs in a buy signal. The Russell, the one that is unlike the others, struggling here with a 17 crossing below the 50. It's not over, it's not done. It could certainly rally from here, but it's struggling compared to the others. And as we pointed out, the VIX and the dollar both, well, as the dollar was heading down, it bounced a little bit intraday on Friday, but still down on the week. If we look at those weekly charts real quick, won't spend much time on them. You can see the big move off the bottoms on the daily, the NASDAQ weekly catching up almost at its highs. YM weekly all-time highs. Even though the Russell on the daily looks a lot weaker, it's really just flagging, not far off its all-time highs. All right, change this back to the daily so I don't forget. I know a lot of people have, started following the expected move. As I said in a response to the HGSI board, I didn't make this up. This comes from Donald Kaufman, TheoTrade. I just watched him use it enough, and I subscribe to TheoTrade. I don't give out indicators that somebody else who has a paid service offers on their site, but I'm sure if you Google TheoTrade expected move, you can probably find them for free. So remember, the expected move, well, the expected move is simple. Try that again. Oh, I got to close this one. All right. The expected move would be if you went to options platform, type in the SPX, and then you want to look at 1 week. So we ended the week on the 9th. So a week would be the 16th. You go into it, you go over here, and it says the expected move on the S&P 500 for the next week is, actually, let me just see one thing. $53 points, plus or minus 53 points. So that would mean that if I was looking at a straddle, let's see. And at the money would be 41.28. It's going to be in between, it's going to be about $50. And that $50 is going to buy me a call and buy me a put. Okay, so what happens here is for $50 I can control the movement, whether the stock goes up or the SP goes up or goes down. But if it doesn't move 50 points in one direction, I'm going to lose money. So said another way, if the strike price here is 41.25 and the S&P goes out at 41.75, then the call, which I'm long, is worth $50, and the put that I'm long is worth 0. So the market makers are betting that the S&P does not move more than here 50 points between now and close on Friday. Now, if I pay $50, that means I have to have a big move, and they're betting it's not going to happen. Now, why does that matter to me? Because we were talking about the expected move. So when you look at the green and the red, that's defining what the market makers expect to be as the expected move next week. Now let's look at the SPX instead of the E-minis, perhaps. Shouldn't be that much different. Now, what happened here is that the week before ended right here. So that set a mid-range right here, the expected move, and it was about 53 points above and below. The S&P traded up to the top of the expected move, went sideways Tuesday and Wednesday, and then really broke out massively on Thursday and Friday. That's a lot of strength. That also means that straddle would have been worth quite a bit of money. Probably was worth another $50, so it was a $100 move. That's an outsized move. The market makers have at least, well, in their odds when they set this price. So that was the S&P. Let me just change it back to the E-minis so I don't forget to later. Now look at the NASDAQ futures, almost exactly the same. The NASDAQ futures traded up to the max on Monday, went sideways Tuesday and Wednesday, and blasted up Thursday and Friday. Very bullish. The Dow futures, almost as much. They went sideways and popped above it on Friday. So all of these, the NASDAQ, the S&P, and the Russell had positive moves exceeding their expected move. Now look at the Russell. The Russell traded down Monday, Tuesday, and Wednesday. Now this is the futures. IWM would look similar, but a little different. one could have certainly looked at this, and on Wednesday at the close or Thursday at the higher open could have started to nibble on the Russell. So the Russell traded down, and that's how I use it. I look at this as potential support and resistance and recognize that it can blow right through, but I look for reversal candles, and then I consider a counter trend move, or might be a counter trend. The VIX traded down at the bottom the entire week, and the dollar as well. So is it helpful? I think it's helpful. It gives me a sense of how the market's doing compared to what the option makers, or excuse me, the market makers had thought it would be. And I do use it for reversals in the market. All right, let's look at underneath. Now the rates came down pennies, but they came down. And I think what was killing growth in tech stocks was probably not the absolute number of 1.6, 1.7% rates. It was the fact that it just came up like a climax run. Well, both the 10 and the 30 years gave up a little being the key word. If I look at the AD lines, you see some divergence here. You see that the Russell 2000 AD line in white and the IWB, which is an ETF, the Russell 1000, the large caps, and the IWB, which is a large cap ETF, new highs on both. That's super duper. But look at the Russell 2000, more small and mid caps. Both of them ticked up this week, but where these are at all-time highs, the small stocks are lagging. Let's look at some more. NYSE all-time highs, and this here is the Russell that actually is diverging here. Even bonds turned up this week with the rates stuttering. And the NASDAQ, like the Russell 1000, new highs on both AD and stock price. You know, it's hard to be bearish, except maybe on the Russell stocks here, when you have new highs in AD line and in price. Breadth, didn't do much this week. The stock market ticked up in yellow, and the stocks above the 200 and stocks above the 40 minimally changed. However, the 12-week new high, new low, the Warden 2121 did tick up. And this has been something for me, over, at least a decade more that I've been using it. When it gets that high, I have to be aware that it's only got a little bit more extended it can get. Now, doesn't mean the market's going to sell off, but typically it'll run up until it gets to the white line, which is almost 100%. And then it either goes sideways or, sometimes you can get some pretty significant drawdowns. Now, interestingly, if you follow the yellow in the S&P 500, the drawdowns occur when it turns down, okay? And the higher we get, the more likely that new high, new low turns down. The daily McClellan, not helping us. We look for extreme readings, nope. Divergence of price and oscillator summation, absolutely. New highs on price, not on oscillator, not on summation. If I look at the weekly, the same thing. New highs on price, not down here. So clearly we have divergence on the McClellan. So all is not perfect, but I would say bullish thus far. Current buckets, looking at the stocks in the S&P 1500, automated template and edge rater, 2/3 of them are above their midline, bullish. Very few are above the top of the Bollinger Band, also bullish. There's more room to run. There is no evidence of a Hindenburg omen on the NYSE or NASDAQ. There has been some debate between edge rater and HGSI. I'll leave it alone right now. Absence of new lows. Market tone, the Woody indicator here, the major indexes are all green. If we look at what happened this past week, it was a good week for growth. Now, if you look here, you can see that there's not a whole lot of movement, but clearly the trend goes higher as ERG gets better, ERG being EPS rank, relative strength and group. Interestingly, what drove it was EPS rank. Relative strength rank did not seem to drive it this week. Since growth worked last week, If it worked again this week, then the stocks that were doing well a week ago when they got their A, B, C, D, E accumulation distribution letter rank continued to do well. As I said, I'll say I had a good week. You can see in green, both my current holdings up nearly 3%, and my buy watch list 2.5, the filtered buys 3.24. IBD 50 was 2.24. The S&P 500 was 1.26. Growth was in charge. If we look at sectors down here on the Woody indicator, the only sector that's weak is energy. If we look at, now I'm switching out of the S&P 500 and I'm looking more at the S&P 1500. These are the Q tools from Sagar, SuperiorProfit.co, SagarNandy.com. And these are awesome because intraday it gives me really deep understanding of the markets. Again, a little bit difference in sectors because it's looking at the S&P 1500, not 500. For example, over the last 5 days, the only S&P 500 sector that was down was energy. Here you could see it was 8 and 3, and so red would be the one that matters, and you could see energy really took it on the chin this week. In fact, you look over the last month, energy seems to have weakened considerably. So what does this tell me? It tells me 1, 2, 5, 10, or 1 month periods of time, sector winners versus losers, industry and stocks. Just gives you a sense of what's going on underneath. Not excessively bullish, but more bullish than bearish is how I would say that. Then my buckets are done real time, so I could see what the breakdown is above and below the midline in the S&P 1500, and then the buckets down here. As you can see here, a strong week, 8 out of 11 were positive. Now, if we look at Friday, strength was in discretionary, industrials. Information tech was stronger if you look at the whole week versus just Friday. Discretionary and on the 5-day, where is it? Information was, technology was at number 8. So it was the 4th best performer on the week. If you look over the last 2 weeks and last month, information technology tech has been the leader. Now, what I typically do intraday is I like to go fishing for stocks. And I like to go fishing for undervalued stocks with good growth in the top industry groups. So if I highlighted discretionary industrials, hit the gear on Friday, then I would have popped up the industry groups that make up these two sectors. Then I could have ranked them here by top industry group: motorcycles, home building, apparel, department stores, apparel again, and home furnishings. Then I could have basically highlighted the ones above 140 and hit this, and this would have brought me up a list of stocks that are in those industry groups, and this is within the S&P 1500. And then the way Sagar set this up is I click on those 3 stars and I get a list of undervalued growth stocks. Since apparel is something that I've seen move, I do have Gap and I own Abercrombie and Fitch. I thought I'd look and see what's going on with apparel. So BKE or Buckle. I drop Buckle into the Q Vital tool here, and it gives me a much broader list of stocks. It's giving me a list of all the stocks in the industry group within this market. This is a larger group than in the S&P 1500. You could see here the fundamentals, and this light blue here tells me it's undervalued. It's got great earnings. You could see in this group of apparel stocks, 88% of them were up on Friday. And then if I hit this, it gives me a list of those stocks right here. I hit the 3 stars. I end up with Buckle, which I thought was extended, Hib, and Tilly's as 3 apparel. And so I looked at each of them, and the one that I found most compelling on Friday was Tilly's. And why did I like Tilly's? Because here's a stock in a clear-cut uptrend that had pulled back to support, and this is the weekly chart. And then I had a recent buy signal by John Person. I don't have resistance until I get up to here. It's not a big move. That's probably 8 to 10% move. but I like this, and we'll come back to this or others later. Last week, I thought the Canaries might run, and this was where they were last week, breaking above the 100. Now they have broken above the 50, showing strength. Pocket pivots, new person buy signal, still in a squeeze. News and earnings. I think that not that the government lies, but the government lies about inflation. How much more does it cost you to fill up a tank of gas? How much more does it cost to buy a house? I asked my wife, it's not getting cheaper at the grocery store. So I think we have inflation. We saw some inflation in the PPI on Friday. I thought it would spook the market more than it did. We got CPIs coming in on Tuesday. I think those are going to be important. We got jobless numbers, retail sales, inventories, home builders on Thursday, and more home stuff, and then some sentiment for April on Friday. I think that we have an issue going forward with inflation, and it's going to be interesting to see whether the Fed is right and that it's transient and goes away, or if it's going to turn out to be something that slays the bull. Earnings. Banks are here, means we're starting another cycle of earnings. So we got some big banks, JP Morgan, Wells Fargo, Goldman Sachs. Here, we've got Lovesac, which I own. The only reason I got it is I got to decide. I had a really good day on Friday. We got some regional banks here, a couple airlines popping up. It is a judgment call to hold stocks over earnings. It is bad judgment to not know when your stock's earnings date is scheduled. A lot of words here. Let's just say the market, as I showed you, all-time highs. NASDAQ led on the week. In the S&P 500, 10 of 11 sectors were up. Energy zone was down. The Fed confirmed, reaffirmed that they're dovish. PPI was hotter than expected. We'll see what happens. This is clearly liquidity driven. There are high valuations. We have creeping inflation, but you add to that the dovish Fed, aggressive fiscal stimulus, markets are probably going higher. One can suspect that a fair amount of the recent stimulus ended up in the markets. I had a really good week. I mean, Amazon's my biggest position. I had reduced my hedges on it last weekend, and I got rewarded for it. Microsoft and Apple also had big moves. We'll take a look at those. Google, Netflix, Facebook, stocks we had talked about all had great moves. Will this tech rally continue, and will it allow the NASDAQ to join the spiders and the Dow at new highs? I bought several things off my list last week: Hubs, Pinterest, WMS, and New. I continue to roll up and out my options. For those that have not been here before, the reason why I like options is that it forces me to take profits. So if I have an option at the money at 25 and the stock goes up to 40, then before my option expires, I'm going to sell that option and buy one closer to 40. That means I'll put in my pocket $10, $15. And then I'll sell an option maybe at 50 or 55, which will help finance the cost of that rolling. So I roll them up to a higher strike price. And when I do that, that means I'm taking money off the table and putting it in the bank. And I'm rolling them out to a later expiration. So I will roll up and out my options every couple of months because it forces me to put money in the bank. Now, I am up 7 figures this year to date. I was up over $1 million, close to 1.3 at the end of March. So I'm up about 50%, but I don't even know how to calculate because I've used up 2/3 of the money that I had to begin the year in my taxes, and I bought 2 houses, and my account's going to be light on money till I close the house I'm still in June. So do I figure it out on where I started? How do I impact taking money out? Who knows? Whatever it is, I'm up over 50%. Now, my neighbor knows I was up a lot more than that in January or February, and the market pulled back and I pulled back as well. Clearly, The way I trade, and I use a lot of leverage and margin, you got to know what you're doing, because no matter how good you are, when the market shifts, you get hurt. Although it's funny, if you look at where my profits are, a lot of them came in my hedges. Hedges reduce my return. They also allow me to sleep at night. I think the market continues higher. It's still the best place to put money. But that said, I always like to lighten up in May, although it hasn't always worked to sell in May and go away. I'm concerned about inflation risk, but play the markets we have, play the market we have on Monday. And I don't care who you listen to over the weekend. At 9:30, the markets opens, you play that market. You don't play the one that we hypothesized. All right, halfway done. I know Sagar likes to do everything live, and I do too. The challenge with, I've got so many different programs. Don't tell me. I guess we're not looking at TradeStation. I forgot it went off. All right. Oh well, let me see if I can kill the TradeStation. There we go. Let's look at HGSI, Major Markets Plus. Let's just look at where the leaders were on the week. Dow, NASDAQ, S&P, NYSE, all up at the top. Interestingly, gold miners moved up a lot. Some of these ARCs are moving up. What underperformed? Boy, NASDAQ Biotech has been dead. Silver, gold. So look at this. The metals down, the miners up. Let's take a look at things and see what we can tell about the market. Yes, some of this is repetition because we already looked at it on Thinkorswim, but hey, it's my webinar, or my video rather. S&P 500, beautiful lower left, upper right. Coming up to the next fib extension line. Perhaps we'll stutter there. Is this an exhaustion gap on the weekly? Would it surprise anybody if we open up and then we start trading down? No, we've come a long way. We're getting extended, but I'll trade it. I'm ready for it. I'm thinking about it. Right now, I'm bullish looking at this. Bullish with caution. S&P 500. Let's take a look at the Dow Jones. The story is very similar to me. All-time highs, not the big gap there. Bullish with caution. The Russell. Here's the IWM. Sitting right, let's see how it closed compared to the 50. Is it above it? Closed at 222.59. It's closed above its 50. That's important to me. It's got chandelier stops underneath, supporting it. I don't think the Russell's that bad. I mean, this might be an interesting buying point of the Russell. Clearly, we'll see how it opens. It can go either way. It's underperforming compared to the first two. It's also underperforming compared to the NASDAQ. Here's a NASDAQ composite, and you could see that the NASDAQ composite is not as forceful up as the others. It had that pullback, but strong week with new buy signal, threatening new highs. Again, if I had to guess higher or lower, I think it's going higher. The new weekly bongo turned green, so I guess I'm bullish. What can we look at underneath? We can look at a couple different things. Let's look at biotech. Actually, first we're going to look at the IBD 50, because I bet this more closely reflects my account and others. On the week, the IBD 50 was up 2% over here. It's still below the 50. It did take out its PSAR dot, had a couple of mobile breakouts. Bullish or bearish? Well, remember what I said about the blue ice failure. It's still got to get above that 50, but clearly has had a nice move off of its bottom. Let's look at the microsector FANGs ETN. Broke out above its 50. Let's look at NASDAQ Biotech. Biotech is dead. Now, eventually biotech is going to wake up and biotech's going to go back up to the right upper quadrant. But I don't know when. Nobody knows. Look at its relative strength rank compared to the S&P 500. It's 20. I would have been out biotech when it broke below the 50. I wouldn't be back in biotech probably until it breaks up above 155, 160. Now, ASCO, which is the Annual Society of Clinical Oncology meeting, is in June. In the middle of May, companies start to release the abstracts on the data that's being presented. It is very often a major market moving event. So at some point, the NASDAQ's going to start running up into ASCO. It's just horrible right now. The opposite of horrible is awesome. And if you want to see awesome, look at the Philadelphia Semiconductor Index. Looks even better than the NASDAQ at pretty much looks like it's at all-time highs here. One of these two bars would have been an all-time high. So Philly semiconductors look great. Let's look at some more things. ARC. I knew ARC was going up when this guy that works for me got a margin call. He shall remain nameless and had to sell all of his ARC holdings. Well, that's usually the day they can start to go up. So ARC is in a buy signal. Still got to get above the 50. This is the tech and robots. Same story here on fintech. Genomics a little bit weaker. Innovation weaker. Israel, next generation internet still below the 50. So they've all come off the bottom, but they don't look great. And then Bitcoin, I don't play Bitcoin. I think someday I'm going to look back and my son, who may or may not be watching this or listening to this weekend, is going to have the ultimate, I told you so, Dad, because he's been telling me to buy Bitcoin for a long time. And he has bought it, and I'm very proud of him because he's got more money at his age than I ever dreamed of, mostly because he bought Bitcoin. Bitcoin's in a wedge here. Wouldn't shock me to see Bitcoin break out to the upside. What's not been working? The dollar. The dollar has struggled at its 200-day moving average. This is the UUP ETF. It looks a little bit different than the futures. And you could see last week, not this most recent, but a week ago, it had a bit of a shooting star, and predictably it sold off this week. A weak dollar is probably good for my stocks, probably yours too. We're not going to bother with the VIX because it can't get any worse. Metals, gold, struggling here at the 50 on a downtrend. Notice that it's had 3 kahunas in the last 5 or 6 days. You could even, I'm not going to say it at higher lows here. Let's just see if it can break above here. At some point it probably will. Somebody must think so. Silver, sitting right on its 200. The reason I said somebody must think so is if you look at gold miners. Gold miners look a lot better than the dollar. They just broke above the 100-day. They're above the 50. They're above the 8-day exponential. They're above their chandelier stop. They're above their PSAR dots. Now the challenge is, can they get above the 200? I mean, you could certainly be buying miners here. If you like to have fun, you could buy some Nugget or JNUG, which really move, but you're not without risk. And I just want to hold caution to the wind on that. You can't even see this here. That's what happens when you have too many splits. Yeah, never mind. I think it looks interesting. I'm amused that it's better. I guess it's got higher highs and higher lows, that it looks better than the metals. But again, this here is likely to be a challenge. Next thing I look at is industry groups. 07 hit warehouse view. I got 174. If I look at 2-day up, I've got, 2-day down, I got 26, leading by biotech as a loser. 2-day up is 53. Since I'm bullish, just look at the top couple of groups here. Typically, every night I do this. I go on to the leading group here, make sure I'm ranking by raw combo. right click, change industry group, and I look very quickly. Snap. I don't understand this one. I'm not in it. Would have been a good time to start thinking about it. A weekly buy. Just not a stock I trade. You can see relative strength rank in green means it's above 80. It's 91% or 91. Google broke out as we talked about 2 weeks ago and really has had a nice bump. Does it continue to run? It's got great earnings per share growth coming in. Earnings are not to the 27th. It wouldn't shock me if each of the FANG stocks runs up until their earnings. Good time to own Google. I think John Carter had I don't know, the title of his thing was $5 million day in one trade. I think it was a Google options trade. Whatever, I don't play that way. But it is good for marketing, and it's probably real. Twitter, nice pullback to the 50 and a move up. This looks interesting here. And Facebook's already had a big run sort of before the others even started. Again, and these stocks have earnings per share growth greater than their multiples. All right, so that was internet media. Let's look at application software. I own some of these. I own Salesforce. Broke above its moving averages here. Still pretty much in a downtrend. I think it looks interesting. The weekly bongo turned green, couple pocket pivots, in a person buy. It's got horrible relative strength, and that could be a bother for some. It also had a weekly high close doji the last couple of weeks, closing above the high of these dojis, which is John Person's most bullish candle. I call it out right here. Adobe broke out. Intuit's broken out. DocuSign not yet. Autodesk. I like when it breaks above the 50, stutters for a couple days, and then breaks out again. That looks interesting here. HubSpot. This is one of the others I bought this week. It actually opened up Monday, and it took out the chandelier and triggered my buy, and then it came back. So I thought I had an oops there. Tuesday it had a nice day. Wednesday it stuttered, and then it broke out Thursday. So it turned out to be a good trade. What called me out to this was the two kahunas in a row and taking out the 50-day moving average, a mobile breakout from a squeeze. I'm still in that. What I did with HubSpot is I did a butterfly because it's an expensive stock, and I do butterflies where I think I did a 470, 520, 540 butterfly where you end up buying the 470 call, selling two 520 calls, and then you buy a 540 call, so it can't turn negative if it goes up. Now, 470, 520 is $50 upside. The short one, 520, 540 is $20 to the downside. And so I have $30 if it takes out 540 of upside. And I bought that for $4 or $5. So it's a cheap way of playing an expensive stock. And I bought quite a few of them. What I did on Friday, I actually sold out of the 520, 540 short calls because I didn't want to give back that money. And all I got to do is buy the third week of May, close above 520, and I'll have maximum gain on that trade. And we're right about that. I don't have to wait to that time, but every day I wait, it'll be worth more money. But that's HubSpot. I'm still long HubSpot. I also have a position in C. This has just been a monster stock for me. At some point, I got to wonder when I give it up. But this stock has just been an amazing run. Another one that I'm long on is Digital Turbine. And I just get the sense this thing's going to blast out to the upside. They've announced a number of recent acquisitions, pretty much been living above its 50-day moving average. Here's its chandelier stop. I just think this one's poised to break out. Specialty apparel, I mentioned that earlier. Lululemon, I bought a position before earnings. Again, a butterfly, where if it went up, I would have made money, but it was an inexpensive position. If it went off the top end of my butterfly, I would have still made money. And it actually has done nothing until Friday. It actually had a move. I'm still long my butterfly, but you have to understand. And let's just look at, well, we'll take one of the stocks tonight that I like, and I'll look at a butterfly on it and talk about why butterflies, when I'm concerned about market tops, work for me. So Lululemon, we'll see. Burlington stores breaking out to new highs. Gap is one that I own. I've owned for a while. Look at this move on Gap. $6 to 32. Wow. My guess is Gap continues to run up. Limited brands. Somebody tried buying it, and then the deal fell through because they didn't want it because the stock had dropped after COVID. Well, Jiminy Christmas. Prior to COVID, I guess it was about $25. And then it dropped down to $9, and now it's $68. Boy, I bet Les Wexler and the rest of the gang in Columbus is happy they didn't sell out at a lower price. Wow. Now, can you buy this stock? Sure, you can buy this stock. It's just, I'd rather buy a stock coming out of a base. This has just been a monster. Wow. TJ Maxx, basing from November until a couple days ago and breaking out now. Great earnings per share growth, does have a big PE. This one looks interesting. American Eagle Outfitters. I thought these companies were all dead because of COVID. I guess their death was a little bit early. I also own Abercrombie & Fitch, similar another Columbus-based company that's just gone berserk from 9 to 39. It's easy to have good returns when you have a couple of these in your portfolio. Capri Holdings. Great earnings per share growth, at least if you look out the following next quarter. And this quarter is already out. Earnings not to July. Nice run up, pull back. Looks like it wants to break out here. So there's a lot to like in this group. Now, the one that we ended up on Friday was Tilly's. Looks a lot like Capri in that it pulled back to the 50, had a person buy signal and breaking out. This is the one that came up on my with Cigars Tools as an undervalued growth stock. Right click, go back. Infrastructure software. Breakout of Microsoft. Now, last week I showed you it just broken above its chandelier stop, 2 kahunas in a row, a mobile breakout from a squeeze. In my mind, not rocket science. This was a great move, and it was up on the week 5.7%. We're not talking small growth stock. We're talking Microsoft. OKTA, I've played this one in the past. A lot of people like it. It's still below the 50. Mobile breakout from a squeeze, a John Person buy, pocket pivots, and kahuna. A lot of the elements that I like to buy. Notice since COVID, it's gone up quite a bit on its revenue. Still doesn't make money, but I guess this thing is probably being multiplied on revenue. Betting person says this goes much higher. Still an expensive stock where it's at right now. ServiceNow, I'd say the same thing. You're buying it at the 50. Look at this move up. Do you think this is the last time it goes up? I don't. I think this thing will continue to go higher, but you're not buying it on its earnings. You're buying it on the growth in revenue and sales. CrowdStrike, one that I continue to hold on to for reasons I don't know, fighting its way back, but still has to get above the 50. when I say holding it, I had some options that basically I thought would expire, and then it had a big move the last week. So they were in the money. I rolled them up and out and took a little bit of money off the table, and we'll see where they go. This is an interesting stock. Somewhere back here, Citron came out and said, MicroStrategy will be $700 within a year. A lot of people must follow him. I thought it was more for the shorts. And MicroStrategy ran up to $1,200. Why? Because they're a Bitcoin miner, and they keep taking all their money and buying more Bitcoin. As Bitcoin's gone up, MicroStrategy's gone up. I'll tell you that somebody came up with a really big target on them this week, and it made the news. Let's see if it shows up in here. Yeah, it opened up in a different window, so I'm just going to leave it here. It doesn't give me the target, but I saw somebody put a really big, let's see, let me bring it over here. So this was in Barron's, for example. MicroStrategy's a bet on the Bitcoin rally. You have MicroStrategy. You have Riot Blockchain, you have Mira Patent Corporation, and you have a number of other companies that have been buying or mining Bitcoin. 32-year-old business intelligence software company. So they're not a miner, they're a buyer. Last year began dabbling in Bitcoin. They raised money, and they own 91,600 Bitcoins at an average cost of $24,000. It's crazy, but it's a way to play Bitcoin. I may watch MicroStrategy this week. I'm getting tired, and you're probably getting tired of listening to me. Investment management, small dividend, BlackRock. This goes as the market goes. The market's at all-time highs. So is BlackRock. T. Rowe Price. I don't usually buy these companies. U.S. Global Growth Investors, all doing very well. I'd like to have a beefier dividend if I'm going to give them my money. Communications equipment, talk about Microsoft, Amazon, and others. How about Apple? Broke out above its 50. Another big move. Weekly move on Apple. Look at this candle. 8.13%. Maybe we're getting towards that blow off top. Hope this wasn't the blow off top. Here's one, CommScope. I have to do more research, but if I had to pick a stock that's going to be on my buy list for tomorrow, that's on my buy list for Monday, that I might be most interested in, this is going to be up there on my list. COMM. Again, I have more research to do. Why do I like it? I like it because sideways move, and then here we had a new person buy signal, 2 kahunas in a row, pocket pivot, viable gap up, earnings per share growth much bigger than its PE. It's a big company with $1 billion of revenue. I think this thing looks interesting, and I'm going to do some more research on CommScope. Just looking to see anything else I like. Medical devices. Again, here's your typical massive volume spike, 320 million shares on news, and then it comes back to the ground. I don't think I'll play that one. Zimmer I like a lot. It's kind of loose. I'd rather it be tighter. Sideways move here, gosh, going back to January, and it broke out on Friday out of a squeeze. Person buy, kahunas, pocket pivots. This one looks very interesting. I'll put that as another one to ZBH that I might want to look at. Okay. Here's another that looked interesting, Edwards Life Sciences, but I'm going to stick with the ones I have. And this is what I do constantly. I have a hard time buying Home Depot and Lowe's after this move, but boy, what a big move on these guys. What a big move. Home Depot, Lowe's, Restoration Hardware I'm in, Bed Bath & Beyond, not yet. At Home, here's another one I thought looked interesting. Had a new person buy signal, mobile breakout, sitting on top of its 50. I'd like to see it give me a signal down here, which it isn't yet. Builder's First Source. So that group looks pretty awesome. Consumer Finance, Visa. You know, for the most part, these have gone sideways. Probably become Bitcoin plays as well, Visa and MasterCard. Just looking for something that I think is viable here. Large pharma, that's a bit of a surprise. Pfizer, you know, I guess it just took out its 200. Mobile breakout from a squeeze, a new John person buy, a pocket pivot, and a kahuna. Pays a 9.6. I do not think this is real. I really don't think 9.6% dividend is real. Let me go check. I think I looked at this last week. $1.56. It's more like 4.5% dividend. So George, if you're watching this, I don't get that. It's at a growth stock. Is it a rah, 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 cha, 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 going to the moon? No. Is it interesting? I'll give you it's interesting. I don't think it's not my cup of tea. AbbVie, a drug company that trades more like a biotech, that has a dividend 4.5%, accelerating earnings. I'd like to see it get above the chandelier stop, but that one looks interesting. Not AZ, no. So why are these guys on the list? It's simple. What is force? Force is today's close minus yesterday's close. All these stocks look like they were up a little bit, but they're also very big volume, and it's the delta of closes times volume equals force. All right, you're probably getting tired, so am I. Let's look at home builders. These things have been on fire. Lennar breaking out all-time highs. D.H. Horton, Pulte Group, all look outstanding. I wish I was in a bunch of them. Oh, I am. I'm in ITB. So I decided just to go with a ETF, which kind of looks like the stocks. And I still am in this. Pays a teeny weeny dividend. All right. Anything other groups I wanted to look at? Precious metal. I'm in American Barracks, which is now GOLD. Notice all of them were up over the last 5 days. Kirkland, interesting pattern. It's pulled back quite a bit. Above the 50, you could put your stop just below the 50 and let her ride. Relative strength has gotten stronger as the stock has gone sideways. This used to be a heck of a mover. American Barracks, same thing on relative strength, broke above the 50. This is the one that I'm currently playing. Are these great? No, they're not great. They're interesting. All right. So what did I like this week? Let's go to my buy watch. So when I went through the market, these are the stocks that I came up with that at least will be things that I'm going to play around with on Monday. If you look at the different industry groups, a lot of specialty apparel. Okay. Here's apparel footwear, VF Corp, for example. Broke out sideways, looks like it wants to go higher. I like that look. Very quickly, let's just review some of these popular held stocks. Amazon. I think it looks great. I refer you over to the right-hand chart, the weekly. I put this on a while ago. This is sort of a trading range. We're up to the top of the trading range. If we break out of the top of this trading range, which could happen as soon as Monday, we could go up quite a bit. But I also recognize that it's been turned down from here every time going back 10 months. I sure hope it goes up because I got a lot of it. We looked at Microsoft, just to reiterate, a big breakout. We'll see how far it goes. We looked at Apple. We looked at Facebook. We looked at Google. These things all look great, but they're all starting to get a little bit extended. Netflix, I think, gave some back. So some of the big cap tech, I started by calling out big cap tech. I'm going to end with calling out big cap tech. Now, I want to do one thing before we end. So these are the things I liked. This I found interesting. This is a really cheap oil exploration company. It's pulled back to the 50. Got to get above its chandelier. Look at the earnings per share growth. Look at that multiple. Even if that multiple comes down, that's 40 cents for the next 6 months. Double that is 80 cents for the next year. If your multiple comes down to 20, it's a $16 stock. I just think that also looked, if I wanted to play energy, but keep in mind energy has been the weak group, although this chart looks pretty good. So what I wanted to do was go into Thinkorswim. I want to show you why I like the butterfly. And let's look at ZBH. And let's say I'm going to go out to June. If I want to buy a call at the money, so that would be, at the money is $170. Let's change this to single. So if I wanted to buy a call at 170, $8.10. All right, so for me to play 1,000 shares, it's going to cost me 8 times 1,000, $8,000. I've got unlimited upside. But if I do a butterfly, so a standard butterfly here would say I'm going to buy a 170, sell 2 175s, and buy a 180. And that's going to cost me $1. Now the problem with this butterfly is that if it goes above 180, it's worth nothing, even though I picked the right instrument in the right direction. So I'm going to play with this butterfly. I'm going to take that 180 and I'm going to make it 210. And I'm going to take this 175, I'm going to make it 200. So now it's going to cost me $655. Now that's not a great difference from just buying the call outright. Oh, okay, I gotta make it. All right, I gotta need more room on this, so let me make this up here. All right. So the way the butterfly works is that I'm going to max out, and then I'm going to start losing money in between the remaining 10 200s and the 210. But the way that I design that butterfly is as long as I'm above $176, I make money on this trade. Okay. As long as I'm above 176. If the stock goes to 300, my gain is maxed out here at $13,000 on my $6,000 investment. But I'm maxing out my gain. If it goes up to the peak, I'm getting $22,000. Now, if I was to do a standard butterfly, let me just do a 170, 180, 190. This is what a standard butterfly looks like. On this one, and break even is where it's got to be right. Yeah, it's up here. Who wants to play this trade? I have to be perfect to make money on this trade. I'm not perfect. I'd rather sell this butterfly for, there's no way it's $6.55. Oh, I guess it is. It doesn't make any sense. 170, 180, 190. Let me go back here on the trade. Just check that here. 170, 180, 190. Yeah, it's 235. I'll go to analyze trade. So you could see I have to be above 174 and less than 185 for me to make money. I would sell this butterfly all day long. I'm not going to buy this butterfly. So if I want to buy something cheap and I want to capture some decent gain, then what I'm going to do is I'm going to, instead of buying that butterfly, I'm going to buy, say, that 170 to 200, selling the 210 or buying back the 210. So I'm long 170, I'm short 2 at 200 and long 210. And instead of looking like this, with a very narrow range of making money, I want this to go to the moon, and I'm going to capture, as long as it stays above 176, I can't lose. So I'm going to pay $655 for this butterfly and maybe buy 20 calls. So it'll be a 20 plus 20 minus 40 plus 20. And it's going to cost me $13,000. And I'm going to hope to make $28,000. That's a decent return. I think it's going higher. It only has to move a small amount for me to break even or make money. And no matter how far it moves with this, I don't know what people call this butterfly, it's not symmetric, my asymmetric butterfly. I don't come down and lose money if it goes too far. So that was just one thought I wanted to show you today of how I look at options. Again, lots of different trades here. Let me just load them up. I could buy an at-the-money call. So let's do this here. I'm going to change that to a single. So I could buy an at-the-money call for $8.10. And we know what that's going to look like. If I did that, it's going to look like buying the stock. But I won't make money until the stock moves to 177.25 because I got to pay back the $8 of buying that call. Okay. What else could I do? Go back to the trade. I could do a vertical. I could buy the 8 for $8.10, and I could sell a $200 call. Which lowers my price to $4.90 from $6.90, but still leaves me with the same story where it's got to move to become profitable. It reduces my downside a bit because I pay less to get in it. I'm now getting into this for $4 instead of $8. So I'm going to play around and look at these different options, but I kind of like my asymmetric butterfly. The reason why I like my asymmetric butterfly is for 655, I've got 30 minus 10 or $20 of upside. I only have to move $6.55 to break even. All I can lose is that 655. And I may look at that trade on ZBH. Now, as I mentioned on Hubs, I will often buy back that short call spread if the stock drops and the value of that also drops, because I believe that this is going higher. And if I could buy back that short position at half of what I was paid for it, I might do that. And then all of a sudden I don't have that minus 10 here between the 200 and 210 to deal with. I'm sure I left a few people behind. I apologize to those that I did. Again, refer yourself to the Options Industry Console website and other options education, and you too can learn how to build blocks with calls and puts and find ways to increase your returns and reduce your risk. Good night, everybody.